What is a bank? A bank is a very simple thing. People gather, they put money in a bank. That person goes and lends it, that bank goes and lends it to some other people, and they then hope to get paid back at a higher interest rate. That's what it is. And so when those people can't pay back because that credit cycle starts to work in reverse and they can't pay back, then the banks get in trouble. They lose money. And when they lose money, then they're bad banks. And the whole system works. So you see that at the same time as there's a contraction in credit, there is a stock market falling because you need to sell assets. And because of the contraction in credit and people are spending less, earnings of companies go down, so the companies are worth less. And because of then the debt problems, the banks don't do well, so we have a banking crisis. So you see that deleveraging happens and in the ways that we're used to happening. The private sector debt doesn't increase, spending is less, banks get in trouble, markets go down, and so on. There's not enough money. The central bank lowers interest rates hit zero, they're stuck. So that's a deleveraging, and that's a depression part of a deleveraging. Take the 30s, take Japan's deleveraging. These are iconic deleveraging and our deleveraging. At first, austerity is the path because you realize, debt is a problem, and what we all have to do is stop getting into more debt. That becomes obvious. We can't continue to do that. So we go through the austerity. But as we go through that austerity, there's a feedback loop because that lack of spending, that lacking of debt, causes somebody else's income to go down. Okay, so then there's a problem because of the debts. So we encounter a lot of debt defaults. And we think about restructuring debts. Those debt defaults means, okay, how do we re-enter an agreement in which we can get past that you can pay what you can afford? And so there's a debt restructuring, a lot of debt restructurings. But the debt restructurings also don't help because, they help to some extent, but they also bring with them problems because one man's debts are another man's assets. So if I lower your debt, let's say we do a restructuring, you can pay half. Your mortgage, you come in, we'll readjust your mortgage, and you can pay half. Then I have to write down that mortgage. And so my wealth goes down. And as my wealth goes down, I can borrow less and I can spend less. So it feeds on itself. So the problem is that there's too much debt relative to income. So you can reduce the debt by having austerity and cutting your debt, and that's good. And that's deflationary, and it's negative for growth because austerity means less spending. And you can restructure, so that is deflationary, and it's negative for growth. And so that produces a lot of pain at the same time. So like in the 30s, 1929 stock market crash, and you go through that, and it keeps feeding on itself, and it's not enough. It's not good enough because it causes that self-reinforcing process. And then eventually, the central banks print money. So in March 1933, which was the bottom of the Great Depression, President Roosevelt severs the link with gold and prints money because a debt is a promise to deliver money. So if I can slip a little money into the system, it eases that pressure. The printing of money, people think is inflationary, and in and of itself, it is inflationary. But if it's happening at the same time as the other deflationary factors are happening, so that there is still austerity, there is a certain amount of restructuring or working out debts, and the amount of printing so that they balance. All three of those approaches have the effect of lowering debt relative to income. So you can lower debt relative to income without having a terrible situation. It's still not, this takes a long time. They call it the lost decade. These countries go through lost decades. It's usually more than a decade, maybe 15 years. But it's an adjustment process, if done well, in which there's the right mix between austerity, not raising debt relative to income, and restructuring, getting the debt payments in order, and putting enough money into the system. So you're seeing